Let's cut the excuses. This week alone, I made $10,835 selling options. That's not a flex. That's what happens when you stop guessing and start using data. Most people won't make that in 3 months. I did it between Monday and Friday. Here's the crazy part. I didn't take big risks. I didn't YOLO into meme stocks. I sold premium on high conviction plays I'm holding anyway. And if you're not doing the same, you're leaving money on the table. Every week, guaranteed. Now, I don't show these numbers to impress you. I actually hate doing it. Feels weird. I'm not here to flash cash, but let's be real, most people have no clue what's possible in the market when you actually treat this like a business. Everyone's out here talking about what the Fed might do or waiting for a perfect signal. Meanwhile, I'm executing because execution makes money, opinions don't. We're in the middle of the biggest wealth transfer since the internet. If you don't see that AI is going to reshape the economy over the next 10 years, then I really can't help you. But if you do, then you better stop playing around with garbage stocks and start focusing on the names that are actually set to win. I'm going to show you 6 stocks that I'm personally either holding, trading, or accumulating right now. These aren't guesses. These are setups backed by numbers, earnings, and momentum. Every one of them has a real shot to move in the near future, especially after the recent dip. So let's stop pretending you're doing just fine and start showing you where the real money's going. Stock number 1 is SoFi. Everyone calls it a fintech. That's wrong. SoFi is a bank, a real one. Charter, deposits, lending, all of it. And the market hasn't priced that in yet, which means it's still cheap, and cheap plus growing equals opportunity. Let me give you numbers. In quarter 4, SoFi added 585,000 new members and over 2 million new products. That's not a fluke. That's 6 straight quarters of 40% plus product growth. Lending and Galileo, both are profitable. Adjusted net income is climbing. The machine is working. But here's the kicker. Student loan headwinds are still here, and the stock's down 19%. Everyone's afraid of temporary noise, which means they're missing the long-term signal. SoFi is scaling. Profitable growth, real users will cross-sell. Traditional banks are losing ground, and this is eating their lunch with a better model, better user experience, and way more speed. I'm playing this 2 ways. 1, long-term hold. This is the type of stock you buy and forget. 2, options. The premiums are so good right now, it's almost stupid not to sell them. I'm writing puts and calls around this position and getting paid while I wait for the price to catch up to the fundamentals. SoFi isn't a speculative bet. It's an underpriced bank that looks like a startup. That gap won't last. And if you're sitting on the sidelines because of headlines, then you deserve to miss the next move. Next, most people don't understand Palantir because they're still thinking about it like it's 2021. The spy tech meme, the meme stock crowd, irrelevant. Palantir has completely shifted. It's now one of the most profitable, most scalable AI companies in the market, period. Let's get real. They've been GAAP profitable for 6 straight quarters. That kills the unprofitable tech narrative. In fact, U.S. commercial revenue grew 70% year over year, and the number of customers literally doubled. That's not fluff, that's enterprise adoption at scale. And once they're in, they stay in. Why? Because Palantir isn't just selling software, it's embedding itself into the core decision making of these businesses. Their AIP platform is being rolled out like wildfire. Governments, Fortune 500s, defense, logistics. It's the infrastructure layer for decision making in an AI world. That's the difference. Other companies sell tools. Palantir builds the operating system. Everyone else is renting apps. Palantir is laying down the rails. I've been adding on this dip. The stock pulled back 30% and it has strong support around $76. That's when smart money loads up. I'm also writing cash secured puts to get paid while accumulating shares at a discount. Risk is low, upside is strong, and the story hasn't even started for most investors. If you believe AI is the next frontier, and it is, then Palantir is the control tower. Everyone's watching NVIDIA, but here's the truth. Chips move data. Palantir turns it into action. That's where the value is. And if you're waiting for Wall Street to bless it before you buy, you might be paying 2 times the price. NVIDIA is still the king of AI chips, and it still reigns. Everybody wants to talk about NVIDIA like it's over. It ran too far. It's priced for perfection. That's surface level thinking. NVIDIA isn't riding the AI wave. They built the damn wave. And they're still the only game in town when it comes to real performance at scale. They recently dropped earnings. Revenue up 265% year over year. Earnings per share up 769%. Let that sink in. This isn't a startup. This is a $2 trillion company posting growth like it's a seed stage rocket. And the crazy part, they're still sold out. Their H1 chips are backordered. Their new B100s are already booked out by the biggest players in the world. Everyone wants to call it overvalued, but here's the problem with that argument. There's no second option. AMD isn't catching up. Intel is nowhere close. Chinese alternatives? Good luck getting American companies or defense to run critical infrastructure on Beijing-backed chips. It's not happening. NVIDIA has the lead, and more importantly, they have the lock-in. Once you build on their stack, switching costs are massive. Yes, the stock is down 23% from its highs. Good, that's your entry. Consolidation doesn't mean collapse. It means the market is digesting the last run. I'm not expecting another 200% run this year, but I do expect steady growth. Why? Because every new AI application needs more computing power, and NVIDIA controls that layer of the market. I'm not overcomplicating this. I'm holding. I'm selling covered calls when premiums are juicy, and I'm loading more when it dips under pressure. If you believe AI is the future, NVIDIA is the toll booth, and you don't get rich skipping the toll, you get rich owning it. We have to understand that most people lose money in the market because they try to be clever. They chase headlines, bet big on garbage, and ignore the obvious. SCHG is the obvious. It's boring, it's predictable, and that's exactly why it works. SCHG is a growth ETF from Charles Schwab that holds the top names in technology. Apple, Microsoft, NVIDIA, Amazon, Meta, and more. These companies already won. You're not betting on them figuring it out. You're buying businesses that are already dominating their industries and still growing. Right now, SCHG is down 12% from recent highs. It's building support at $25 and nobody's talking about it. Why? Because it's not exciting. It doesn't triple in a month, it just compounds, slowly, reliably, and over time, and that's what builds real wealth. If you want exposure to big tech without managing individual trades, this is it. The expense ratio is dirt cheap, so you're not bleeding money in fees. It's also tax efficient, especially inside retirement accounts. No stress, no surprises, just results. I hold SCHG in my long-term portfolio because it solves a problem: exposure to innovation without overthinking it. You don't need to outsmart the market every day. Sometimes the smartest move is to stop pretending that you're smarter than the market. How do you win over 5, 10, or 20 years? You stack quality, you hold through noise, and you let the monsters carry your portfolio forward while everyone else is chasing penny stocks and earnings rumors. That's SCHG, and right now it's on sale. Next up, Robinhood is the sleeper stock ready to double. Robinhood crushed earnings. They're profitable, growing, and expanding globally, and the market still treats it like a joke. That's the opportunity. Let's talk facts. The stock is down 35% from recent highs, but this isn't the same Robinhood from 2021. This is a lean, profitable company with support at $38, international expansion underway, and a product ecosystem that's getting dangerously sticky. They just launched in the UK, they're approved in Singapore, Asia Pacific is next. This isn't a test run, it's a land grab. The global retail brokerage market is worth over $4 trillion, and Robinhood is coming in with zero commission trades, sleek user experience, and 24-hour access 5 days a week. These other countries are still using outdated, high-fee platforms. Robinhood is going to eat them alive. And at the same time, Robinhood is quietly building a super app for money. Retirement accounts, high-yield cash, crypto wallets, credit cards, all under one roof. Do you know what that means? Zero customer acquisition cost. They already have 23 million users. Now they're cross-selling everything. Revenue per user is rising. Net interest income is up 100% year over year. And the best part, Wall Street still hates it. They still think this is a meme stock. That's your edge. While institutions wait for headlines to confirm what's already happening, you can build a position before the re-rating. I'm in. I've sold cash secured puts and I'm watching for breakouts above resistance. The setup is clean. If Robinhood lands this international expansion, this stock doesn't just recover, it can double in 12 to 24 months. And by then, the people who waited for proof will be the ones buying your shares at double the price. Now, let's talk Meta, which is the AI advertising monster. Everyone's talking about AI, but few companies are actually making money from it. Meta is. While others are pitching future potential, Meta's AI is already driving billions in ad revenue right now. This isn't theory, this is profit at scale, and the market still hasn't priced in how far ahead they really are. Let's start with the numbers. Net income margin, 37.9%. That's elite. Meta keeps almost 40 cents on every dollar it earns. Compare that to Google, compare that to Amazon. Meta is running one of the most profitable business models in the world, and they're doing it while expanding into new markets. Everyone's still focused on Reels versus TikTok. Irrelevant. The real power is behind the scenes. Meta's AI ad engine is targeting users better than anything else online. Advertisers don't care about headlines, they care about returns. Meta's AI is feeding them better results, so they keep spending more. It's simple math. And here's what most people miss. Meta isn't just social media anymore. They've built a full-scale commerce and ad delivery platform on top of the largest user base in the world. 200 billion real views a day. That's not engagement, that's attention. And attention monetized through AI is an unstoppable machine. The stock is down 21% from highs. That's your entry. Institutional money has been buying around $590, and the fundamentals haven't changed. They're just better disguised now under the weight of short-term noise. I love Meta at this price with this setup. It's the rare mix of cash flow, growth, and AI leverage. This isn't a long shot, this is a freight train, and you either step on board or you get run over trying to time it. Every stock I just covered has one thing in common. They're being misunderstood today, but will look obvious in hindsight. And the people who win aren't the ones watching CNBC. They're the ones who saw it early, acted early, and held conviction when everyone else hesitated. That's exactly what I do inside my Patreon. You get every trade I make, every move I'm planning in real time. I post my option plays, my stock entries, my exits, my price levels. I don't just show you what I'm holding, I show you why. And when I make $10,000 a week from options, like I just did, it's not a flex, it's a signal. The game is rigged against people who are guessing. If you're trading off news headlines or Reddit threads, you're blind. The real edge is getting in before the move happens, and that's what my Patreon is built for. I've spent years testing what works. What I share is what I do. And if you're serious about building long-term wealth, this isn't optional anymore. This is the edge. Access, strategy, execution, that's what separates people who grow from people who drift. So you've got a choice. Keep reacting to the market and missing the real moves, or get in the room where they happen first. If you're trading without this, you're blind.